Americans now carry a record $1.26 trillion in credit card debt, and in just 3 months that balance grew by another $21 billion. But the interesting part isn't how much debt Americans are taking on. The interesting part is why it's becoming so hard to stop using credit cards in the first place. For millions of households, the credit card has quietly stopped being just a payment tool. It's become a financial lifeline. When groceries, rent, insurance, and daily expenses eat up more and more of people's income, the credit card fills the gap between payday and actual expenses. At first, that gap can seem harmless because one small purchase rarely feels like a major financial decision, but dozens of small purchases eventually add up into one huge balance, sitting on that single piece of plastic. And once that balance goes unpaid, interest starts turning yesterday's purchases into today's bills. According to the Federal Reserve, revolving consumer credit, which includes credit cards, kept growing through the second quarter of 2026. At the same time, new credit card delinquencies remain elevated, showing that some borrowers are struggling to keep up with payments. This is where a dangerous cycle begins. People start using new credit to cover expenses created by old debt. The minimum payment makes this cycle feel manageable, since the account stays current, but the actual debt never really goes away. Meanwhile, interest keeps piling up on the unpaid balance, month after month. And the problem gets worse when an unexpected bill shows up before the previous balance is even paid off. So a growing credit card balance isn't just a story about expensive shopping. It's also the story of households using borrowed money to maintain ordinary life when cash flow gets tight. But that doesn't mean America is suddenly collapsing. Overall household delinquency actually improved slightly in the second quarter. The real warning sign is that credit card borrowing and serious financial stress are becoming more concentrated among borrowers who have very little room to absorb an unexpected expense. So the bigger question isn't why Americans keep swiping their cards. The bigger question is what happens when borrowed money becomes part of everyday survival. Because a credit card can make today's financial problem invisible, but tomorrow it can make that same problem a lot more expensive. And with Americans already carrying more than $1 trillion in credit card debt, this hidden cost isn't just a story about individual households anymore. It's become a story about the entire economy.